Hello, my name is Joe Hopkins, the Hopkins CPA firm. I'm a CPA here in Corpus Christi, been in the licensed CPA in the state of Texas for about 28 years now. However, I do work all over the United States. A fair majority of the work here is in the Texas area. Today, I wanted to talk to you a little bit about the ERTC. Anybody know what that stands for? Well, it's Employee Retention Tax Credit. So you've heard everything about it online. You probably got bothered with it all over the place. There's a lot of scam type artists out there, fly by night people trying to get this credit through. And at the end of the day, are they going to be there when you get audited, right? So rest assured, we're going to be there for you if you get audited, all right? So honestly, that'll be a separate engagement. I'm not sugarcoating that, but we stand behind our work and we'll get the things through. And honestly, if you do it right and you got the numbers right up front, you're not going to get audited. But we're fair and honest, and we get the stuff passed through on the proper channels there. In regard to the ERTC, you're going to say, well, do I qualify for it? Well, here's kind of the general rule, right? So it compares the base year 2019 to the year 2020, and also compares the base year 2019 to the year 2021. And it looks at this on a quarterly basis. So let me give you an example. If you took the second quarter of the year 2019 and you compared it to the second quarter of year 2020, and you had a drop of 50% of revenue during that time period, then it's very possible you might be eligible for employee retention tax credits for any employees that you have during that time period that you retained. On the other side, if you dropped only 40%, that quarter's not eligible. Now, with that being said, there's some other minor loopholes where you still may be eligible, but that's kind of the general rule. I'm not going to get into the details of that today in this discussion, but just give us a call. We'll find out more about it. And that applies to various quarters in the year 2020. Now, let's take the year 2021 versus 2019. The standards drop a little bit, or a lot actually. You only have to be 20% under to qualify. So if you take that same quarter in the year 2019, quarter two as an example, and you compared it to the second quarter of year 2021, and it dropped by more than 20% in the year 2021 compared to that base year 19, that quarter could qualify. Now, and then you add up all the quarters, and there's some calculations in there. It goes anywhere from 5,000 per employee per quarter on up to 7,000 per employee per quarter. And then there's a funny calculation where you get the max credits 26,000 per employee if you qualify for all quarters. So with that being said, we just take it on a quarter by quarter basis, kind of analyze the numbers. We do a free analysis for you. Come see us and we'll talk some more about that. But in doing so, just feel confident that you're with a trusted CPA. We're going to stand behind our work, and give us a call. Please hit the like button on this video and the subscribe, and we'll be getting back with you. If you need some more information, look down in the description area and you can find out more information about me. Thank you very much. Have a blessed evening.